Good morning friends and welcome to the pre-market view. We have seen sharp cuts across global markets as 10-year bond yield in US have spiked up to about 2.74. So effectively they've moved up by almost about 20 basis points in the last about 3 days. Also the jobless claim data that came out from US is at 6 years lowest level at about 3,20,000. So now the possibility of tapering as early as September has increased, and that is worrying most of the markets, more so the emerging markets. So the US markets were down about 1.5 to almost about 1.7%. Remember friends, even a day before when we had holiday, the markets were down. European markets too were down anywhere from 0.5% to almost about 1.5%. No major data points to look at in the Eurozone. And Asia today has opened up weak. The Nikkei is down almost about 1.3%, and even Hang Seng and most of the other markets, except one smaller market, I think Straits Times is showing marginal gain. The rest of the markets are down. Even SGX Nifty is suggesting that we are going to open up about 35 to 37 points down. Back home, we had a very smart pullback in the market, and the Nifty recovered almost about 200 points. Now that we have this negative global backdrop, it remains to be seen what exactly really happened. But the overall trend in the market doesn't look too positive, and given the kind of steps that the RBI is taking to restrict the rupee movement and the kind of global backdrop, we think that the overall trend for the market would be down. I think the only space which is looking quite stable or resilient would be IT space, because we think that that is where there is a genuine buying interest, and to some extent telecom. The rest of the sectors, including the banking and most of the other sectors, are looking like not going to see any kind of a meaningful revival. On that note, let me invite Shaival to take us through important F&O cues, data and strategies that we can have in the F&O markets.
Good morning friends, let's have a view at derivatives. Friends, in Wednesday's trade, we have seen that markets have been trading into a narrow range, and in spite of that, market were able to close on the higher side of the range, and it closed near day's high. Now, what we have seen in Wednesday's trade is that FIs were net sellers in index futures by around 300 crores, but net they were buyer by around 1500, more than 1500 crore in Wednesday's trade. We have also seen that good amount of short positions have been added in the market with rise in Wednesday's trade. Now the PCR ratio has increased to 1.05 from the mark of 1, as the activity on the put side has geared up phenomenally compared to that of call, and which is clearly visible on the strikes of say 5,600, 5,700 and 800. Even in the money put option has added good amount of shares in open interest. Now, as SGX Nifty is suggesting a lower opening, it is below 5,700 from intraday perspective. 5,650 might act as a good support for the market. And as we are trading above VWAP, a bias for the market is positive. And from intraday perspective, one can go short on Dr. Reddy's with stop loss of 2243.40. Thank you.
Here are the important news and events that we are tracking today. First of all, the RBI has put some controls and restrictions on the forex outflow, as well as they are looking at giving more incentives and interest rates to the NRE and FCNR deposits. So the key highlights of these controls are that the cap on the limit would be actually 100% of the net worth as against 400% of the net worth for the automatic route, wherein the companies want to acquire the businesses or assets abroad. So the RBI is looking at putting some restrictions on the amount of forex outflow that can come because of this, and also the cap on the individual foreign exchange outflow also has been capped at $75,000 as against the previous cap of $2 lakh to basically control the forex. Also, in a bid to invite more remittance in the country, the NRI fixed deposit rates could be hiked as high as almost about 400 basis points above the LIBOR rate, and also these deposits would be basically exempt from the CRR and SLR requirements. Given the global backdrop that we have, wherein the interest rates in the US are spiking up, one doesn't really know how much flow of money could come into the market, but the RBI and the government seems desperate to get more forex inflow to actually restrict the rupee movement. So it remains to be seen what would be the actual impact of these moves. In another important development, the DIPP, which is backed by the Health Ministry, has decided to ban the foreign direct investment in the existing rare and critical domestic drug making facilities. This is at a negotiation stage, but there seems to be an attempt by the government to actually restrict foreign entities from acquiring important drug making facilities in India. For ONGC, after acquiring about 10% Videocon stake in the Mozambique gas field, ONGC is looking at acquiring another 10%, which would take its stake to about 20% in the same gas block, oil and gas block. And in case of telecom, the consumers should actually brace for more than 10% increase in the voice call tariffs, which could definitely be a bit of positive for most of the telecom companies like Bharti, Idea, Reliance, so on and so forth. And the finance ministry has said that LIC can increase its investment in individual companies to 25% as against the 20% cap which is currently there. This would be done only in special cases, and the software company Ramco System is looking at doing a right issue in the next few months, basically to raise about 125 crores. NSCL issue actually, which has dampened the sentiment of the market, and certain investors now have given a payment schedule which could be lasting over a long period of time, and even with that particular payment schedule, there is going to be a shortfall of almost about 1200 crores. So most of the investors are not happy with that schedule. So it remains to be seen what kind of legal action can these investors take against NSCL, and whether there is any move by the government or SEBI, or more importantly the FMC, to actually supersede the board of NSCL and actually give some kind of an assurance to the investors. Reliance Industries, some positive news, as the company has discovered a new gas reserve in its deep water Kaveri block, which could produce about 15 million cubic meters of gas per day. So one can go long on Reliance with a stop loss of 848 and a target of about 891 to 908. Bharti Airtel, as we've already talked, that the call tariff rates are likely to go up by at least 10%. Apart from that, the Singapore Telecommunications Singtel is likely to increase its holding in the company by acquiring about 3.24 to 3.62% stake. So one can go long on Bharti with a stop loss of 336 and a target of about 353 to about 360. That's it from all of us, friends. Have a great weekend and see you on Monday morning.